It is a pleasure to speak to people who are interested in doing business in the District of Columbia. From a tax perspective, the district is unique because we administer both state and city level taxes. Every other jurisdiction you're going to deal with in this country has state governments, county governments, municipal governments, each of which administer their own taxes. On the state tax side, like any state, we have an income, sales, withholding, alcohol, tobacco, motor fuel taxes. On the city side, we administer commercial and residential real property taxes and personal property taxes, much like any city government would do. And really, because we are so unique, and it's a surprise to many, it's much easier to do business in the district than in our surrounding jurisdictions. There's no need to deal with multiple jurisdictions. You can do business all in one place, which is very different than if you're doing business, for instance, say in Maryland. Because if you're doing business in Rockville, you would have to worry about Rockville's tax laws, Montgomery County's tax laws, and Maryland's tax laws all at the same time. And I can tell you from some experience, they don't always work in concert. In fact, often work at cross purposes. So the advantage to the district is really you do avoid overlapping and redundant taxations and overlapping and redundant regulatory regimes. Like most jurisdictions in the country, district revenues have fallen sharply since 2008. And while they're showing some signs now of leveling off, they remain far below earlier levels. The mayor and city council have addressed the budget shortfall mostly by reducing expenditures and drawing on reserves. Surprisingly, they have done very little in the way of trying to close the budget gap through tax changes. Those that have occurred, tax increases, have largely been at the margin. In 2009, for instance, our general sales tax rate, which had been 5 3/4 for some time, was increased to 6%. That's actually temporarily. In fiscal 12, it goes back to 5 3/4% unless the council moves to change that. The city increased its cigarette tax from $1 to $2 and then to $2.50. Last year, another marginal tax change is our standard deductions, homestead exemption, and personal exemptions were all indexed to inflation. The council has frozen those indexes, so those amounts are not going up, so they effectively are marginal increases in the income tax and real property tax. Motor fuel tax was increased to 23.5 cents, matches Maryland's rate. One significant change was that the council put a 40% floor under the homestead exemption or for real property taxes. Last year, the sales tax was extended to soft drinks. One key item for business, which has caused some business interest, is that the council in 2009 provided in legislation first that that combined reporting for franchise taxes, unincorporated and incorporated franchise taxes, would be reportable on a combined reporting basis beginning in tax year 2011. Shortly after that, there was much uproar about that from the business community, not surprising. The council changed the legislation to specify not that the combined reporting would apply, but that the council would enact legislation to provide that combined reporting will apply beginning in 2011. It's a practical matter of repeal. The CFO's office has presented the council with legislation which would provide for combined reporting beginning in 2011, generally modeled on the Multi-State Tax Commission's model statute as modified by West Virginia, which is the only state to have adopted the combined reporting. The council's had the bill since the summer. It has not been introduced. it seems likely that it will not be introduced. At this point, the impact of that to the council is that in the fiscal plan there is $22 million attributable to it in tax year 12, 19 in tax year 13, and I think 20 in tax year 14. If the legislation isn't introduced shortly, those numbers will come out of the financial plan, and the council will have those numbers to cover, as well as other shortfall they have to deal with. I want to say a word about our tax amnesty. It's now over. The council had authorized its first amnesty in 15 years this summer, and ended on September the 30th. The offer of our amnesty, and it was similar to ones offered in Maryland, not Maryland's most recent one, but two previous ones, which was essentially to waive penalties and fees in exchange for the payment of tax and interest. Target for the program was $20 million, which we met, but only at about $20.8 million. So the total didn't run away from us. But the agency is now in the process of cranking up our post-amnesty enforcement. The centerpiece of that is that we've been granted authority to direct employers to set W-4 allowances of tax delinquents to zero, effectively increasing their withholding. And we do expect to send notices to employers in January, basically identifying individuals for whom you, if you're an employer, need to set their withholding allowance to zero and keep it there until you get authority in writing to release it. On the business side, we have, of course, enforcement was put to bed during the amnesty, and we have resumed pursuing businesses, largely small businesses, who didn't take advantage of the amnesty, and typically are businesses that collect sales taxes and don't send them in. Part of the 2011 budget reconciliation, the council has authorized $2 million, is authorizing $2 million to the CFO's office to improve our compliance efforts on the programming side. It has also authorized the district to participate in the federal vendor offset. That's a program. It's active in New York, New Jersey, and Maryland right now. District hopes to come in shortly. Basically, and we should be a big beneficiary. Basically, if you're a federal contractor and you owe DC taxes, the Treasury will intercept your payments and send the money to us in exchange for us essentially doing the same thing for the Treasury. So the district has so many federal contractors that we hope to be a big beneficiary of that. You know, the IRS has announced it's discontinuing mailing tax booklets this year. We are discontinuing the mailing of our D30 and D20 tax booklets. That's the corporate and unincorporated business franchise taxes. Overwhelmingly, taxpayers who report to us don't use our forms. I think it's something like 90% of the taxpayers file electronic forms with us. So we are discontinuing the mailing of those booklets. We are mailing D40 individual booklets this year, but there's be a notice on the front saying this will be the last year that we're mailing those. The IRS announced that they were discontinuing that in October. Once again, I think in our case, only 8% of our individual income tax payers use our forms to file their tax returns. The rest file electronically or with computer-generated forms. One little change for those of you who deal with the sales tax is, and just to be alert to that, when we mail our annual sales tax booklets out in January, they will only have 9 months worth of returns in them. We are switching to, instead of calendar booklets, will be used fiscal year booklets. Our fiscal year begins on October the 1st, and the council tends to make tax law changes for sales taxes effective October the 1st. So this is an effort to synchronize our tax forms with the law changes.